Howdy, hotshots. So I was here a few days ago talking about how, with travel falling off and with the rise of ownership of Airbnbs and other short term rentals, and with the resurgence of hotel room stays, Airbnb profits have been down. And across the board, people with Airbnbs have been making less and less money. There's more competition. Airbnb has become more stringent on their listings. People have been returning to hotels instead of staying in short term rentals because they've become so expensive with cleaning fees. There's a lot of rules in place at a lot of them. People have to clean up after themselves. So it's just a lot less attractive than it was initially, especially during the last few years where people didn't want to go to a hotel. They had health concerns, or the hotels had special rules, or they weren't even renting out at the time. Now people have begun to return to normalcy, and it's really hurting the Airbnb owners, especially because over that few years, there was so much talk about how much money they were making that it just got saturated with competition. So many houses were being bought in order to create short-term rentals. Now we're in a unique situation where the competition is stiff. Airbnb is cracking down on the listings. People are returning to hotels, which is driving short-term rental stays down. People are running out of cash due to inflation, and so they can't afford to take trips, which means they're not staying in short-term rentals. The rates are higher, so people aren't able to refinance the Airbnbs, or when they were buying them, they're paying higher rates, which means they have larger mortgages. And so short-term rentals would cover those mortgages, but long-term renting isn't going to cover their bills, which means that they can't just switch from a short-term rental model to a long-term rental model. And when they lose money on these houses, a lot of them are going to be forced to sell. Well, now what we're seeing is there's a surge in cities and even states that are criminalizing or talking about criminalizing short-term rentals. They're making it illegal to run short-term rentals in their areas of jurisdiction. This is leaving a ton of people who bought houses planning on using them as short-term rentals out in the cold. And so they're crying because they're not going to be able to make their mortgages. The cities and the states and the local people, on the other hand, are saying that a lot of these short-term rentals being owned in their areas are what's leading to housing shortages and housing unaffordability. And so that's why there's this push to get rid of the Airbnbs and short-term rentals, which was already going to happen naturally in some regards anyway, because of the lack of popularity recently, and because of the competition, and because of the hotels being more competitive. So you're getting all of this compounding effect where we really haven't seen the results of any one of those things yet, and they're all going to hit at the same time. And this is exactly what can cause a crash, right? Where there's this kind of euphoria where everybody's rushing in and buying all of these short-term rental properties, and there's all these people that are using them. And then all of a sudden, all of that dies off, and it all hits at the same time. Now, in addition to that, you're going to have laws that are making it harder to run those things. That's all happening at a time when the economy's in a downturn. Anyway, rates are on the rise, and so less and less people are looking for houses. People think, the inventory is going to remain short for a long time. But the reality is that there is inventory on the market all the time for one reason or another. Either people lost their jobs, which there's going to be a lot more of that in the future, especially with AI, like we were talking about. People lost their jobs. People died. People have to move because of their jobs or because of their family. People are downsizing their rental portfolio, which is going to happen with Airbnb and probably long-term rentals too, because as people see the writing on the walls, they're going to be selling off their properties before they have a chance to decline in value. They're going to try to capture as much of that as they can. And they aren't emotionally tied to those the way that people that live in their houses are. But once those prices start dropping, then the people that live in the houses are seeing, whoa, I'm losing all the equity that I have. A lot of them will try to sell the houses at the same time because they want to capture whatever equity they have before they go negative. Once they go negative, there will be short sales, and there will be people just walking away from their houses. So see, it's a precipitating event that starts out the situation, but it snowballs, and it snowballs very quickly relative to history. I mean, it still takes a year or two a lot of times for the housing market to be in deep despair. but it starts in big chunks and it moves down very rapidly before it starts to recover. You've already seen a lot of the big real estate companies like BlackRock and some of the apartment rental places and stuff like that, some of the ETFs that have become net sellers of properties instead of net buyers. And so those events are starting to happen. And once those all start to happen, they're just going to compound off of each other and create this potential tsunami of price reductions that you're going to see in the housing market. We've seen it several times throughout history. So there's a lot of people thinking that this time's different. It's always going to be higher. It's never going to go back down. And if that's the case, then eventually nobody will be able to afford a house regardless of whether or not they own their house right now, because property taxes will continue to increase and homeowners insurance will continue to increase. And regardless of who owns what properties, they're not going to be able to stay in their house, right? There's going to be very few people that are going to be able to maintain their property if they have to pay thousands upon thousands of dollars more for homeowners insurance and thousands of dollars more for property taxes. Now, they'll be able to cash out and they'll get a nice windfall when they sell their house to one of these big companies that you guys think are going to buy every property on earth. But the bottom line is they're not going to be able to maintain ownership of that home. And that's just going to happen to everybody if things are different now and houses are never going to come down. But the reality is they're probably going to come down at some point in time, right? Because people have to be able to afford a house. There's not going to be any financial benefit to buying a house if it's cheaper to rent all the time. Right now, it's cheaper to rent than it is to buy a house. If you don't have to maintain the house and you don't have to take care of it and you don't have to take any of the risk, why would you be buying a house in this high interest rate environment and this high property value environment? Why would you be buying a house instead of just renting? There's too much risk versus reward. It doesn't mean that it can't pay off. It's just not likely to pay off, right? And so while this can't be any financial advice, I'm not qualified to give you financial advice. You just have to look at it from a logical standpoint. If housing affordability is at its lowest point in history and house prices are at their highest point in history and rates are high and with no sign of going down, possibly even going up, they're not going to be able to refinance. People are refinancing right now, and they're not refinancing, obviously, to get a better rate. They're refinancing to get cash out because they're broke. And there's a lot of people that are broke out there. Okay, so if people are refinancing in order to get cash out because they're broke, how are they going to pay their payments on everything that they're buying? Car prices are up, house prices are up, food prices are up, energy prices are outrageous. Property taxes are going to go up because the values of their houses went up. Homeowners insurance is going up because of this huge inflation in the labor and goods markets that's causing it to be so expensive to build a house. Nobody's going to be able to afford anything. Does that seem realistic? No, it's not realistic because the cure to high prices is high prices. We know that. We know that throughout history. So can it last longer than you can stay solvent? Yeah, sure, it can. Is it going to last forever? It never has before. It never has before in the history of the world lasted this unaffordability. Now, the only way that the prices can stay where they're at is if people's wages go up in order to match. Is that going to happen? Probably not, because right now with the high rates, the companies are going to start losing money too because they're going to have to refinance their bonds at higher rates. It's going to be more expensive to borrow money, so they're not going to be able to do R&D, and people can't afford to buy their goods, so they're not going to be making as much profit on those. It seems like it's just a matter of time before all of it hits the fan, and they're kicking the can down the road, and they've been doing it for a while, but they just can't do it forever.